I've been getting a lot of questions on the channel about owners' compensation and owners' draws and how do we record them? How should we be thinking about them? There does seem to be some confusion about how owners are paid in a business versus how other employees or contractors are paid. And I've done a lot of videos on this channel showing you how to record things in your accounting system in your QuickBooks Online. And so what I want this video to be is we're going to cover how to record those owners' draws or those distributions. We're going to talk about what type of entities do need those distributions and when you'll see those. And then we're also just going to talk about some of the tactical stuff so you can actually see where that information shows up on your financial statements. And I'm going to show you that with real financial statements, and we're going to hop into an example as well. So if that sounds good, I'd love to be able to explain this to you. Please stay tuned for that. If you aren't already subscribed to the channel and you are running a small business, you might want this information. So please go ahead and subscribe to the channel, and also make sure you have the little notification bell clicked as well so that you will be notified whenever we have a new video. Before we get into the screen share and the example, although I think that's going to be very powerful and seeing it is going to help people really understand it, what I want to do is talk about why we have owners taking distributions and what those are coming out of the business. So when you hear the term owner distribution or owner's draw or shareholders distribution or partner distribution, what that means is it means money is taken from the business and paid out to the owner. Okay, simple as that. Usually means somebody's writing a check and getting paid. Sometimes it's a direct deposit situation. Sometimes it can be distributed in multiple different ways. And there might be multiple owners that are getting those distributions, okay? But really, it just means money going out of the business. So most of the time when we think about money going out of the business, we call that an expense in accounting. So like if you were to pay your rent or you're to pay your employees, that shows up on the profit and loss statement as an expense. However, owner's draws are considered to be something different. They are considered part of the equity transactions in the business, and those types of transactions show up on your balance sheet. Okay, so a lot of times people will look at their profit and loss statement, be reading it, and trying to figure out where their payments are. As an owner, they might be thinking, oh, maybe my payment to myself, my distribution, is lumped up in payroll. But that's not the case. So oftentimes, and this is where people can get into kind of some tricky situations with their cash flow, thinking that their profit and loss and the profit number that is showing at the bottom of the profit and loss, that it includes their payment to themselves, when really it does not. Okay, and so I'm talking a little bit theoretically, and I'm going to show you practically what that looks like in just a second. So the types of entities who are going to potentially be taking these types of draws will be things like sole proprietors, LLCs, because LLCs are usually taxed as sole proprietors. They can be taxed as a sole proprietor or an S corp. Now, all three situations, there are what's called flow-through entities, and as well as partnerships. So that's four types. We have sole proprietors, LLCs, partnerships, and S corps. So if you're taxed as any of those, you are a flow-through entity. And what that means is it means the money that the business makes flows through to your personal tax return as personal income. So yes, you're going to have a separate, tax form to show all of your business activity, but that number at the end of the day flows through to your personal income statement or your personal income taxes, and you have to pay taxes based on that income that you made from your business. Your business is an asset that's making money for you. Hopefully it's making money for you. We like profit in our businesses. When that happens, oftentimes the way that business owners compensate themselves, if they don't have to be on payroll, like S corp owners need to be on payroll, but oftentimes S corp owners will pay themselves with some payroll and some distributions. Almost all of these situations of those four entity types, the owners are going to be taking some kind of draw or distribution, whatever you call it really doesn't matter, those distributions to help pay themselves for the work that they're doing in their business. And so those distributions are coming from the profits. They should be coming from the profits of the business. If the business is not making profits and the owner is still taking out distributions, well, they probably have cash from something else. Maybe they had some savings that they're, paying the owner out of the savings, or maybe they've borrowed money in order to pay the owner. Ideally, they're not taking distributions unless there is a solid profit in the business. Okay, so that's a little bit of a background story of why people would be taking distributions, and then that's going to help make sense as we dive into our example right here. So let's go ahead and hop into QuickBooks, and I'm going to pull a couple reports and show you what this looks like. Here we are in the sample company of QuickBooks Online. We've done a lot of videos showing you how to use the functionality of QuickBooks here. By the way, if you're not in QuickBooks and you're not in an accounting system and you want to get into an accounting system, we will put the links to our discount to QuickBooks in the description box below. We love QuickBooks here, so that is the system that we recommend. All right, so what I want to do is I'm going to pull a profit and loss statement. So I'm going to go down here to reports on the left, and then we are going to go here to profit and loss. And what I want to show you first is we're going to go up here and make sure that we are just pulling a date range. We're gonna say last quarter, since this is being recorded on April 14th, it's defaulting to April 14th, but let's go to last quarter so we have a full quarter of data. In this hypothetical situation, the owner wants to take a quarterly distribution. So what I wanna show you is what the quarterly profit looks like, and then we're gonna talk about a distribution, okay? So we're gonna pull this report for last quarter, January 1st through March 31st, and then we are going to run this as cash and run the report. Now, this sample company doesn't have all the data that I would like to have in it. Ideally, I would like to have this business showing more of a profit, but we're going to work with what it's given us here. Okay, so right now it's saying that the income for the business was $4,000 and the expenses were actually more than that. So total expenses were $4,000 plus this additional miscellaneous expense of $2,900. So this business is actually at a loss right now and it's lost $2,785. So in this situation as a CFO, I would probably be advising this business owner probably to not take a distribution because the profits are simply not there. If this business was in a much more profitable position, let's say that, expenses were revenue was $15,000 and expenses were closer to the $7,000, that would be a situation where we've got profit and we would save some money for taxes, and then there would be a portion of that we could distribute to the owner as a distribution. But you can kind of get into, how much to distribute to the owners is kind of a different subject. So we're going to maybe save that for a future video. If that sounds like a good idea, please make sure you tell me in the comment section below. So, but what I want to show you here is that they don't have a profit, but we're going to go ahead and assume that they do, and I'm going to show you how to record an owner's distribution, okay? So what we're going to do is we're go into transactions. We're going to find the bank register. So we're going to go to our checking account here, and then we're going to go to bank register over here on the right. What we need to do is we're going to add a transaction. So if this business owner had already paid themselves a check and we hadn't recorded it here and it came through on the bank feed, we could code that transaction to the owner's distribution. But what I'm going to show you here as if I am taking a check right now and I'm going to go take it to the bank. So we're going to go over here on the left where it says add check, and you can add check or you can add anything here. We're going to assume in this situation that it's actually a check, like a physical check. And then we're going to, let's say that the date is today when this check is written. It's going to default to the number, whatever the last check number was, it will default to the next one, unused number. However, if you need to put, make this the actual check number, that's what I would recommend doing. And then let's go ahead and set up a payee. I went ahead and put myself in here. Because the options for how you set up new people to pay, new payees, there's only vendor, customer, and employee. And in this situation, we set up the owner as a vendor because we can't set him up as an employee in the system without it kind of triggering all this employment stuff. So I set him up as a vendor, or I set myself up actually in this case. And so we're gonna select me. We're just pretending that I'm the owner of this business, although it says Craig's Landscaping. I'm gonna pretend I'm the owner of this business and we're gonna record a payment. And let's say I wanted a distribution of $2,000. So we're gonna put it in here. I'm gonna put Q1 distribution, and the account is what's important here. So make sure you select owner's distribution. And it might be called owner's draw, it might be called shareholder's draw, it might be called partner distribution, depending on what entity type you are. The important thing here is that those owner's distributions are classified over here. If you can see that on the right, it's equity. Okay, so this does not come out as an expense like any other type of money going out. This is an equity transaction. So if you set up the account correctly, it will show equity. And so you're going to select that. Okay, so for this owner's distribution, I actually have to make this date as of March 31st so that it shows up in my reports through March 31st. So sorry about that. We are going to look at the profit and loss, running that report, and you will see the owner's distribution is not listed here, because it is not a profit and loss transaction. This is a balance sheet transaction. All right, so what I want to do now is I will show you where to find that. Go to reports over here on the left, and then you're going to look at your balance sheet, and then we're going to pull this. We'll do this for the same thing, last quarter, run it as cash, and then you'll scroll all the way down. Assets are first, liabilities are second, and then down here is that owner's distribution. And what this does, when we draw money out, it creates a negative equity transaction. So this is making the whole business go into more equity, more into the negative. So this loss is already showing up in our equity, and then we're taking more money out of the business with a distribution. So this is actually kind of a negative transaction. This is something that would be a red flag to me as a CFO. If I'm seeing that the business is a loss and the owners are still taking a lot of distributions, that would be a problem. But I wanted to show you guys, this is how you record it. This is where it shows up on your balance sheet. And this is a good kind of thing to think about when you're thinking about paying your owners, and also thinking about your cash flow. Always remember that if you are not making cash from your profits in your business and you're still taking out money to pay yourself as the owner, you will get into a potential sticky situation. Okay, so I hope that this has been really helpful. Real quick, I want to show you the other way. If you're in bank transactions and you have let's say, if you have a transaction here, let's just pretend that this rental, this $200 was a distribution. You would go and find that distribution account, owner distribution account, and make sure that the payee is correct over here, and you would record it that way. Okay, so I just want to make sure that it kind of depends on if the check has already been paid or the distribution was already paid and it comes through the bank feed, you can code it to owner's distribution. But if you're writing the check actively, then you want to go ahead and put it into the system. And then when that check comes through the bank feed, it should match up to the existing check that's already been written. Okay, so just a little thing about using QuickBooks Online, okay? I hope that this video has been helpful to all of you who are paying your owners through an owner's distribution. And if you have any questions, I'm happy to make more videos on this topic in general. As I was talking, I'm having more ideas of things that we should be talking about on the channel. So yeah, let me know in the comment section below what other questions you have. And I appreciate your time. Thank you so much for being here. Bye, everybody.